Welcome back to Golden Rule Radio. A happy 2024 to all of you listeners. It's great to be back with the whole team here today. And as we start off recording here on January 3rd, I'm looking at Rob. He looks 1 year younger. Miles, I don't know how you do it, Rob, but no, it's a good time of year to kind of get a show going. And we did miss last week, so I feel like we haven't been together in a while. And it's an opportunity to really kind of bring 2023 to a close, and then we'll do our best to give you a little insight into what we see coming in 2024. Right, guys?
Right. We see gold breaking into new territory. So this is going to be an exciting 2024 for gold. Anyway, silver, a little frustrating. Miles, you want to weigh in on this?
Yeah, it's pretty flat. Tori, what was the number you were telling me earlier? Silver did a staggering what in 2023?
2 cents. My
Excellent.
friend, it was.
That's what I like to see.
We opened the year at 23.86 cents, and we closed the year at 23.88. And you guys, honestly, we saw a lot of whipsaw in the silver price.
Yeah.
There was a 24% swing from low to high, a low of 1992 and a high of 26.05 in the silver price, and all that just to kind of stay flat. But that's better than the other white metals.
True. Yeah, what did platinum and palladium finish?
Platinum down 6.8% for the year. And
palladium got crushed.
It had a late rally, though. Platinum was not looking good. It had a 9.5% rally in the fourth quarter. So did silver, had a 7.4%. So those two kind of rallied into the end of the year. Palladium did not. It finished the quarter down 11.5% to finish the year down 37%. So that's an example of a metal taking off and running a little bit too far, too aggressively, not to be chased, and hopefully coming back down to earth a little bit, give us a chance to buy some of it, because we haven't been buying it.
No, we've not been recommending palladium.
That's right. So before we give Miles chart fatigue, I mean, it's fun to look at these annual charts on all these. I think, Miles, general trend, it looks like gold up, silver flat, platinum and palladium down as just general trends on a 12-month chart on each of those metals.
Yeah, I think that's a fair argument. I feel like this was a bit of a running theme last year. It's now last year, 2023, last year. A bit of a running theme last year in that gold seems to be leading the charge. And I made a couple correlations to the 2005, 6, 7, 8, where gold was building a baseline for the 2008 to 2011 move up. But it really wasn't until the end of that move that we actually saw silver play catch up. So I was talking to a client yesterday about this. I think there's a fair argument here where silver has always kind of been, what did we used to call silver? Like the poor man's gold, if I'm getting that correctly. I certainly don't want to make reference to wealth versus poor by any means, because I think everybody should buy a little bit of silver. But I think more to that, the argument should be about the involvement of the general public. Because we know banks buy gold. We know that nations buy gold. We know big players buy gold. But what does it take to get 5% of the U.S. population involved, 10% of the U.S. population involved? And unfortunately, as we watch through all sorts of crazes, real estate craze, Bitcoin craze, even the tail end of the last gold market, it tends to be those last 6, 12, 18 months when the general public really starts getting involved. And I think there's a day where the general public says, holy smokes, gold costs what? What's cheaper? And then you start getting this mad dash into silver. I think we saw a glimpse of that to help prove my point. I think we saw a glimpse of that during the 2020 COVID crash. Because what happened the minute the mint shut down? What happened to silver eagles?
Well, and it really separated from the futures price. You would have spot price at one place and then the price of a delivered product radically different, extremes that we hadn't seen since about 2008, 2009.
Yeah, that's right. I remember, too, that spot price indices were askew, right?
Yeah.
The London, the LBMA was different than the NYMEX, than the COMEX, and the futures market, and everybody was wondering, what's the real spot price?
Yep.
It was trying to find a home. Yeah, really interesting. And we did see those premiums spike repeatedly, cyclically, right, Miles? I mean, we had opportunities to exit Silver Eagles at high premiums.
Yeah.
Rob's smiling ear to ear here because he just loves the strategy. And so those are opportunities when it's down, and it's something that we have to be willing and ready to take advantage of. And part of that is the ratio trading too, the gold-silver ratio today, where we're recording. Gold right now is 2,042 and silver's 2,309. It did drop right to 2,299 and came back up. But that drove the ratio as high as 89 to 1 today. It's 88 now. And so anxious to see what direction we go there. Because to your point, Miles, gold is the true money metal. It's going to be the better hedge against geopolitical tensions and monetary policy. And as we start to see the U.S. dollar do certain things, today's kind of a good, albeit small example of dollar index up, bond yields up today, the 10 years back over 4%. And with that comes the equities down, gold and silver down. That's kind of a general rule of thumb.
Well, and as we're talking, I feel like I need to remind everybody that there are several different ways to look at gold. You can look at it like an investment, like we are doing right now. What is its return? What has it done? And I think that's important to know, because Wall Street only considers gold viable if it goes up and makes you money. But we also look at gold as capital, a place to put your wealth for the next 5 years, regardless of bail-ins or what's the article that's just come out, The Great Taking. Yeah, regardless of that, gold is not somebody else's liability. It is its own asset. There is no counterparty risk. So we see it as capital as well, whether or not it's up 13.5% or not. But it's also a legacy investment, something that can be passed on. So while we're looking at the technicals and the fundamentals, I think it's important to let people know, hey, if the wheels come off and the zombie apocalypse happens, you still have money.
Right. Well, and the biggest thing, too, it's almost like death and taxes. Inflation is
Inevitable.
guaranteed.
Yeah.
Right? So we've seen it. You've seen $35 gold.
Yes.
We've seen now $2,035 gold, and the reason being is that currency debasement. What are the two factors there? Is that more of a money supply? Is that a Fed balance sheet? What do you look to first when you're looking at predicting what the gold price is going to do versus explaining where we currently are?
Well, I think, Miles can tell us where we currently are, where support is, where resistance is, but we look to the future. Let's say look out 5 years. We already know what's going to happen to our federal debt. We already know the budget is out of whack. In fact, the Democrats might even want the Republicans to take over the government for the next 4 years because there's nothing we can do. I think it has gone beyond solving at this point. Now, maybe I'm just being overly pessimistic, but I think 5 years from now, your gold will at least buy what it does today, if not more. That may be the no-brainer of this entire show.
Well, it will certainly buy just as much. It'll be the first time in history that hasn't happened. So, yeah, and that's why, getting back to my initial point that we kicked this off on, one of the big reasons why I love seeing that gold-silver ratio still up in the mid to high 80s is I think it means we have a long way for this to go. When we see that gold-silver ratio start pushing down, I'm going to start wondering if the bull market's over. But how can it be? I mean, Tori, you said we've seen gold now up as high as 2035. You said that a second ago. You're $120 off.
That's currently. Just add
2035 now. I mean, we're looking at gold breaking into new paradigm levels. 2148 earlier this year. The retracement has been minimal at best. We obviously could see some downward pressure from here, but the way springs have been the last handful of years, 2035, come on, that was 3 years ago price. That's our baseline.
It really
now.
Was. No,
that used to be
right.
the high.
Yeah.
So could we see a significant move up in gold in the next few months? Well, of course. And that's the part that concerns me.
Well, what a great launching point. I mean, it is. For the gold holder, it's good. For the one that has yet to acquire it or is aspiring to acquire it, you want a little bit of a breather. You want it to stay down. To your point, can you imagine 10% of the population moving into gold?
Oh, my goodness.
If gold's at 2,000, that sucks up a lot of ounces. But if gold goes to 4,000 and 10% of the population jumps in, at least it's fewer ounces. You're not reaching critical mass in terms of availability. At these prices, with how much money's been created, how much money's in the system, how wealthy people have gotten, you will suck the system dry in a short period of time, much like what we've seen 2 of the last 3 years in silver, and expect premiums to spike. So I'm with you. I hope that we get a little bit of a respite, stay down here for a bit.
Yeah.
But we have had a paradigm shift, and we're onward and upward to some new highs, I truly believe, in 24.
We are in new territory. Miles, chart it for us.
Well, this is where it gets interesting to me, and this is one of the things we were talking about here a second ago. So you look at gold here, and I'll throw a long-term chart up just so you can see kind of the movement we've had since 2015. And it looks pretty clear to me that over the last couple of years, we've had this consolidation just kind of beating against that ceiling, wearing down the bears, wearing down all the take profit orders, and looking to push through into new territory. So I'm pretty convinced at this point that we're going to be seeing 2,300, 2,800, 3,500. I think some of these numbers on gold are pretty apparent over the next couple of years. Short term here, we had a pretty strong run from around 1810 up to 21, almost 2150. So we do have some retracement levels here, kind of in $40 increments. I'd be looking 2020, which we're just above now. I'd be looking 1980, 1940, a couple ranges in there where we could see gold bounce back down to, but I don't know. I mean, the way February, March, April, May has been going the last handful of years, and being that this is an election year, I think that we could see, yeah, exactly, very strong gold prices.
Well, a lot of that will be dependent upon the interest rates, right? I mean, if the Federal Reserve comes out February, March.
How do you reconcile that? How do you reconcile the interest rate announcement, what the U.S. dollar is doing, what the U.S. central bank is doing, what money velocity, money supply is doing, and what the S&P is doing? I don't understand how you take all of those pieces and it paints the picture that we're seeing today.
Yeah, add the bond market into it. And if there's any further, instability there and decline in the bond market, that's a huge uncertainty piece.
So you've got dollars supposedly getting weaker, interest rates expected to go back down. So those two things correlate, right? Interest rates go down, money gets cheaper, dollar index gets a little bit weaker.
That's right.
Equity market should be going up because money's going to get cheap again.
That's right.
Real estate should hopefully at least stay at these elevated levels because money's going to get cheap again. Why is gold going up? Central bank balance sheet is going down.
Right?
Yeah.
Velocity is going down.
Velocity of money is coming, well, it's coming back down recently, but it's been bouncing back up for the last year.
Right.
Money supply has been coming back down for the last year. M2
Balance
money
sheet
supply.
coming down. Yeah.
Happy New Year, though. You just hit 34 trillion on our national debt. It's official.
Oh, yeah. Spending, government spending is not going down.
That's not going down.
No. And maybe that's the linchpin.
But it's not helping GDP. I mean, we've had diminishing returns. The more government spending, doesn't impact the GDP like it did 5 or 10 years ago. So we are seeing a slowing economy, which economists will be predicting deflation coming in certain asset classes. But as Don McElvaney talked about it, 40 years ago, it's echospasm where you have elements of inflation and deflation occurring simultaneously. Some sectors are dropping in value, other sectors are rising in value. And it's very confusing for people because everybody wants it to be one way or the other, and it's going to be both.
Well, that just sounds like tail chasing.
Well, and then throw geopolitical tensions in the mix. You talk about an oil and gas spike when you may see copper contracting further, right? Or palladium and platinum coming down, and oil up 3.5% today alone, and some increased Mideast tensions. If that really continues to increase in volatility and conflict, well, then certainly there's an ecospasm right there.
Yeah. I don't see tensions in the Mideast or Ukraine easing at all. I just see it compounding from where we are now.
So I guess Happy New Year. It's going to be a heck of a year this year, certainly here in the U.S. with the elections coming up, some economic changes that were unexpected, Probably welcome by most people. If I don't know, we'll see if Powell does what he most recently said he would do. But Happy New Year to everybody. Welcome to 2024. And we'll certainly be with you along the way every week right here on Golden Rule Radio. So thank you for joining us. If you liked what you heard, you're always welcome to give us a call. If you'd like to discuss your personal portfolio, we can be reached at 1-800-525-9556. You can also find more info on our website at McIlvaney.com. We are on Twitter at ICA Gold and Facebook at McIlvaney Financial. Thanks as always for listening. We look forward to seeing you back here next week.